Welcome to Jobs and Talks. This is your trusted destination for all things career related. Join us today as we discuss the core responsibilities of an accountant. This video about accounting job description is brought to you by Institute of International Accountants. Learn to practically do accounting works like a professional with IIA. Why is accounting important these days? Accounting plays a vital role in running a business because it helps you track income and expenditures. It ensures statutory compliance. It provides your stakeholders like investors, management, and even the government with quantitative financial information about your firm, which then they can use in order to make important business decisions. Now, accountants prepare three key financial statements by their records. The first one is the income statement, which gives them the information about profit and loss suffered or gained by the company. Next, we have the balance sheet, which gives accountants a clear picture on the financial position of their firm on a particular day. Now we come to the cash flow statement. This statement acts as a bridge between the income statement and balance sheet, and it also reports cash generated and spent during a specific period of time. Okay, so it is critical that accountants keep their financial records clean and up to date if they want to keep their business afloat. So we can safely say that the functions of accounting would include systematic tracking, storing, recording and analyzing, then even summarizing and reporting of a company's financial transactions. Let's take a detailed look into the day-to-day responsibilities that an accountant would have to carry out in a company. Recording vouchers and maintaining source documents. Now, another very important function of an accountant is to prepare and review daily accounting transactions and movements in revenue, expenses, assets, liabilities, related entries, and ensuring the accuracy of financial transactions. So, prepare and maintain accounting vouchers would include sales voucher, purchase voucher, payment and receipt voucher, debit note voucher, credit note voucher, journal voucher, inventory vouchers, and also maintain supporting documents of these transactions like enquiry. Then we have quotations, LPO or sales or purchase orders, invoice, delivery notes or goods receipt notes, payment and receipt voucher notes, then debit note and credit note. All of these transactions, in order to maintain these supporting documents, is a vital accounting purpose. Maintain chart of accounts and general ledgers. Maintaining accounting controls by establishing a chart of accounts, defining accounting policies and procedures. Then maintain balances of ledger accounts by verifying, allocating, posting, reconciling transactions and resolving discrepancies. Cash and cash equivalence management. Maintain daily cash accounts, bank accounts, PDC registers, which is post-dated check registers, petty cash statements, and even maintaining petty cash registers, bank facilities, cash budgets, and managing liquidity are important functions of an accountant. More cash and cash equivalence duty involves bank facilities including check discounting, bill discounting, bank overdraft, letter of credit, non-letter of credit, manager's check, letter of guarantee or bank guarantees, vehicle loans and other long-term and short-term loans. Receivables management. This is another critical duty of the accounting department in order to account for and track receivables, including outstanding invoices, any required collection actions. So, accounts receivable is responsible for creating and tracking invoices. The responsibility here includes to prepare, review outstanding reports, aging reports, reconciliation of accounts receivables, and assure prompt debt collection. Payables management or accounts payable. In order to maintain great relationships with vendors or suppliers, making sure that everyone gets paid on time is a vital role. The role of the accounting department includes reconciliation of accounts payable, maintain accrued expenses, prepare aging reports in order to review credit periods and schedule timely payments. Maintain associated companies and related parties account. The accountants would have to learn to maintain accounts of company subsidiary partners and even related parties and handle all related transactions. Manage equity and owner's current account. Now, accountants additionally will have to maintain fluctuations in owner's current account, recording their additions and deductions in capital account, and confirm the equity balance from time to time. Reconciliation. Reconcile bank statements by comparing statements with general ledgers. Reconciliation of payables and receivables, purchase and sales accounts, timely checking of vendor and customer account, owner's current account, associated companies and related parties account, and also reconciling financial discrepancies by collecting and analyzing financial information. Inventory management. Accountants within a company will also sometimes have to handle stock management. This would include preparing, reviewing, and monitoring stock registers, liaising with suppliers or vendors for optimal replenishment of stock, even managing internal stock transfers. Manage the employee benefits related to WPS, leave salary, end of service benefit calculations, etc. for those accountants working in GCC countries. So here this would include implement and maintaining and reviewing payroll process, then accounting systems to ensure timely and accurate processing of payroll transactions. This would include salary, benefits, taxes, and even additions and deductions, along with calculating salaries with overtime earnings, advanced deductions. Be fully compliant with labor regulations in all GCC countries, including the wage protection system, which is commonly referred to as WPS. Then calculate leave salary, end of service benefits in United Arab Emirates or whichever GCC country they are working in. Accounting, payroll, provident fund, ESI and gratuity and other employee benefits and deductions for accountants who work in India. So this would include implementing, maintaining and even reviewing payroll processing, their accounting systems in order to ensure timely and accurate processing of all payroll transactions. This again would include salaries, benefits, taxes and any other additions and deductions to their salary, along with calculating salaries with overtime earnings and advanced deductions. Now, time to time accounting of expenses in ERP softwares with monthly provisions, making payment of statutory compliance of provident fund, ESI, then professional tax and TDS while posting journal vouchers. These would be one of the few major responsibilities accountants working in India would have to carry out. Accounting accruals, prepayments and deferrals. Manage monthly prepaid to expense conversion, year-end deferral to prepayment entries and monthly accrued expenses and incomes. Manage fixed asset register and depreciation. Learn to record fixed asset acquisitions, then depositions in the accounting system. Maintain fixed asset register, recording depreciation and update the detailed schedule of fixed assets and accumulated depreciation. Effectively manage amortization entries of intangible and fictitious assets. Now they will have to ensure systematic allocation of amortization amount of all intangible assets and even fictitious assets that the company owns. Accounting provisions for expenses and adjustments. Maintain provision for expenses including leave salary, gratuity, end of service benefits and any other future tax related or employee related payments if any. Provision for bad debts and adjustments. Bad debt is a type of accounts receivable for a company that has become uncollectible from the customer because of the inability or due to the customer's inability to pay the amount of money taken on credit from the organization. So here, recognition of uncollectible receivables by maintaining bad debt provisions and adjustments. Also handling write-off procedure for bad debts with provisions and adjustments. All of these come under the responsibilities an accountant would have to handle in a company. Manage month-end and year-end closing procedures. Here, the accountant would have to conduct the process of month-end closing procedures. This includes balance confirmation of accounts, recording monthly accruals, prepaid, deferred, depreciation, amortization entries, provisions, and all other adjustments. Preparation of financial statements. Now, this is one of the vital roles an accountant plays in a company, which is similarly called as finalization process. Prepare periodical financial statements such as trial balance, profit and loss account, balance sheet, cash flow statement, statement of equity, and any other reports as per the instruction from the management. Provide assistance for budgeting and forecasting. The accountants would have to aid in preparing, presenting monthly forecasts and budgets detailing prior month's results, along with forwarding-looking forecasts to upper management for important decision making. GCC VAT. Accountants working in all Middle East countries need to have an in-depth knowledge in Gulf VAT. This includes providing accounting and clerical support to ensure that all financial transactions are in compliance with VAT regulations. So ensuring that all VAT transactions are properly documented, prepare, validate and submitting monthly VAT returns as per law is very important for accountants in the Middle East. GST. Now, those accountants working in India should have good accounting knowledge, especially when it comes to GST payments, then GST returns filing, calculating monthly and quarterly GST, checking of GST accounting, preparation and submission of GST returns in GST R1, 2 and GST R3B. Maintain physical and digital records. Ensure accurate and organized data by maintaining physical and digital records of documents related with the company, owners, banks, vehicles, lease and other agreements, credit facilities. Also accounting documents such as sales, purchase, payment, receipts, debit and credit notes, inventory and then other journal vouchers, payroll and employee records, reconciliation and balance confirmation status. Secure financial information and data backup. Entering financial information into the company database software and checking to ensure the accuracy of the data that we have inputted is again another one of the major functions of an accountant. Perform business correspondence and assistance as requested by the management. Compose various types of written documents such as memos, letters, written financial statements and bank-related documents. Then draft formal business emails and letters for various requirements within the accounting department. Collaborate with internal and external auditors. Work closely with and under the guidance of the senior internal and external auditors and provide technical support to all the auditors or stakeholders by providing necessary information when needed by them. Handling P2P, O2C, R2R and other assigned duties by the management. So as a senior or general accountant, you are responsible for all the works which include procure to payment, order to cash and record to report. Also, you have to perform all other duties assigned by seniors and management. Analyzing and summarizing financial data. Ensure timely preparation of management information reports and data when necessary. This helps the management to analyze and summarize companies' financial data for decision making, understand the financial health and performance of the organization. Get trained to carry out all of these accounting functions and more with IIA's job-oriented practical accounting courses. To know more, reach them at 8138818138. That's all for today's Jobs and Talk session on all things career related. Subscribe for more useful videos like this and do not forget to click the bell icon. Now, we do hope that you find the videos informative. If you do so, please do share it with your family and friends. Okay, we catch you in the next one.